G'day everyone, welcome back to Pete's Investing. Today's April 22, 2023. This is the US S&P 500 update. On all three timelines, we've broken up through the moving average, although on the daily, the moving average still hasn't turned into an upswing. So careful it doesn't just collapse back down like it did in the last few months. Let's drill down on all of these. So first on the daily, again, you can see there, it was in a downtrend overall with some minor retracements on the price chart, but it was still below the moving average, which was a sign of weakness, and it just may do that again. That could be a false break, so just be mindful it may break further to the downside. I do use a CCI instead of the moving average as a key indicator of trend, because you can see back here when it did break below, it stayed below the moving average, and I gave you an early warning to get out of the long trades, so you could have still made some long trades in those periods there. In fact, you could have made some long trades during all these little retracements, but again, that would have been against the overall trend. So just always be careful and respect the CCI moving average movement as it is down here. So again, I've also got this key support here at 38.31, and it's bounced off that last few times, and it's got a nice little range there, but also this key resistance at 41.93, and also this descending trend line, and it looks like it's gravitating back towards that trend line as well. So again, be careful about going along on the overall trend. On the 4-hour chart, I've also got these minor diagonals. You can see there on that diagonal, it's bounced off that quite nicely since we drew it back here. And it looks like if it breaks through to that, it may actually gravitate back to this descending diagonal as well, even though the moving average and the CCI is still in an uptrend, but notice it's weakening on the CCI itself. On the hourly chart, I've also got, as well as those diagonals, notice I've got this minor divergence on the CCI. It's a bearish divergence versus a bullish divergence on the price chart. So generally what it means is, and like it's done here, it's broken to the downside on the hourly, on the CCI, and these generally play out, which means if this will generally break to the downside. So it may be an opportunity to start looking at potential short positions, and that aligns with the daily movement as well. So again, if you want to trade short, that very minor, it could be just a minor retracement to the downside, but that could be an opportunity to take short trades possibly. So I'd wait for it to break further to the downside. In fact, if you want to look at some trading ideas, I use the fractals. So again, during this up period, I would have taken long trades only when all timelines are aligned. So you probably could have taken some long trades during that period there on the hourly chart based on the 4-hour trend. And by that I mean when the candle breaks above the fractal, like it did there, and you're in an uptrend, you could have gone long and take little incremental gains. Again, it could have taken a long trade when it broke above the fractal there, so only take it when it initially breaks above the fractals. So enter there, enter there, enter there, and so on. Now here, for example, we're going short, so you potentially could take short trades only, and that will, so it looks like it's started to confirm a downtrend on this moving average, with the CCI below its moving average, so you could have taken a potential short trade there, and so on. So again, very cautiously going short, but again, just be careful. The moving average of the 4-hour chart is still in an upswing, so you're possibly trading against the trend there. So yeah, just keep cautiously going along. Now, if you want to understand how to properly trade using the average down approach, if you're caught out, reference the links in the description below. Subscribe and like us further on Patreon. Thanks for watching, and see you in a future video.